The deadline to contribute to your RRSP is at the end of this month, and with that comes a lot of questions about how best to use an RRSP to your advantage. And while the deadline to contribute is fast approaching, there are ongoing debates over last-minute contributions and the importance of monthly contributions. And of course, RRSPs are investments, and with that come with the benefits and risks of market volatility. Joining us now to discuss the RRSP deadline is Brendan Caldwell, Director at Caldwell Securities Ltd. Brendan, thank you for being back with us.
Always lovely to be here. Talking to you, Julie.
Brendan, the RRSP deadline is this week, and the date is an important change this year. The deadline is not March 1st. When is it?
Well, it's a funny thing. You're allowed to make a contribution for the previous year in a registered retirement savings plan, an RRSP, in the first 60 days of the following year. So if you make a contribution in the first 60 days of this year, 2024, you can use it against your taxes for 2023. So if you contribute $1,000 in the first 60 days of 2024, it reduces your earned income by $1,000 for the previous year, or you can use it to that purpose. So the first 60 days in most years would land March the 1st, but this is a leap year, and the February 29th falls in the middle of the week. So the first 60 days ends on February the 29th. So this Thursday would be the very last day.
Well, there you go. There are a lot of investors that scramble to make their last-minute contributions. How does a monthly contribution work, and is it important?
I think it's important. That's how I do most of my own investing, is putting aside a little bit of money every month. So yes, people do scramble at the end to write checks, or in some cases to borrow money from the financial institution to put into an RSP, figuring that the tax deduction will be worth the interest. That's probably a little less true with interest rates having moved up as they have, but still it is a strategy. But if you put aside money every month, just enough so you barely notice it, eventually over time the money builds up, as does the tax deduction that you get. So in lieu of paying interest on a loan to buy an RSP for this year, maybe it's worth doing a monthly contribution starting this year and seeing what accumulates between now and, next February.
So for people that have been investing, how do they deal with the market volatility?
Well, you talked about in your preamble about RSPs being an investment. They're actually not an investment. They're a vehicle. They're one of the litany of alphabet soups of TFSAs, RRESPs, LIRAs, LIFs, all kinds of acronyms we have in Canada for these various tax vehicles. This particular one can own, in a self-directed registered retirement savings plan, a self-directed RSP, just about anything under the sun, from having it in a savings account, which has no market risk to it, to owning stocks, to mutual funds, to exchange-traded funds, or GICs, bonds. Anything really can be owned in an RSP. So it's a vehicle rather than an investment in and of itself. This is the last money people are likely to spend. And I usually tell husbands it's the money that last money their wife's going to spend, because generally speaking, we're not around to actually collect on most of our RSPs later in life. They tend to outlive us. So generally speaking, I recommend, whatever the short-term market volatility is, to have it in investments that can grow. There are exceptions to this. If you plan on using it to buy a house in a few years, or you are very close to retirement, or something else, so it's worth talking to your investment advisor. But for most people, from someone in their early 20s to my age and beyond, having investments that can grow, probably the best decision, whatever the short-term market.
Now, you believe investment success is about ideas. It's even in your logo. Don't we have enough ideas online, though?
Oh, those marketing people. Oh, sure. There's a lot of ideas and information online, but I think as we're realizing, the online universe is kind of like the movie Inception, where the idea is being niggled into our brain based on our predilections and predispositions in ways that we all of a sudden think it's our idea, but in fact it's being fed to us by the internet. I don't think there is a good substitute for an open and honest conversation with another human being, an actual flesh and blood human being rather than an avatar, to understand your hopes and dreams and needs and fears. And the ideas will flow from that. So that what you put in place first is, what am I using this money for? How do I feel about it? What is my history and what I want my future to be? That will be a better source of ideas